Hello and thank you for joining me for our Week 1 reporting season video as part of Bell Direct's February reporting season coverage. I'm Grady Wolf, market analyst with Bell Direct. Despite only being early in the reporting period for February this year, we have already seen some key names release results that have both surprised investors to the up and downside. In this video, we'll digest the results and outlook out of JB Hi-Fi, ResMed, CSL, News Corp and Ansell to help you navigate the reports out of these key names early in reporting season. So far this February, we have had 16 companies report, with 8 beating expectations, 4 meeting expectations and 4 missing expectations. ResMed kicked off earnings season with a bang, and investors were seemingly impressed by the sleep apnea device specialist's second quarter results. During the quarter, ResMed reported a 10% rise in revenue to $1.3 billion, gross margin expansion by 300 basis points to 58.6%, and the contraction, and that's up from the contraction in the margin on the prior corresponding period. Income from operations rose 52% during the quarter. The company launched into India during the same period, and a quarterly dividend of 53 cents per share was declared. ResMed has faced some scrutiny over demand diminishing due to heightened presence of successes of weight loss injectables in recent times globally. However, ResMed's CEO quashed all speculations of depleting demand and reassured investors that not only is demand growing, but they are actually working with patients on these injectables to provide a complementary service to these injections to ensure sleep apnea is treated, as weight loss doesn't necessarily take sleep apnea away altogether. RMD is also expanding into AI for healthcare tracking services, and the company expects tariffs from the US on China and Mexico to work as tailwinds in H2, as ResMed's two largest competitors have operations in these regions. Elsewhere in the healthcare space, Ansell shares rallied over 12% after the results were released, after the global leader in safety solutions and protective equipment released strong first half results and increased guidance for H2. The results were partly driven by the contribution of Ansell's recent acquisition of Kimberly-Clark, which posted results ahead of expectations, including sales growth of 7.4% to $140.9 million US. Across Ansell's divisions, total sales rose 12.5% to $1.0197 billion US. EBIT jumped 20.9%. Adjusted EPS rose 33.6% to 55.7 US cents per share, and the company declared a 22 US cents per share dividend. That's up from the 16.5 US cents per share dividend paid in the prior corresponding period. Ansell's guidance may have been the driver of the share price appreciation this week, after the company announced it expects continued organic constant currency sales growth in the second half, albeit slightly lower than the first half, and the company has put pricing in place to offset higher raw material costs and tariff implications. JB Hi-Fi faced significant headwinds of inflationary cost pressures and subdued demand in the first half. However, the tech retail giant still managed to post very strong results, including a 9.8% rise in total sales to $5.67 billion, an 8% rise in NPAT to $285.4 million, and a 7.6% increase in the interim dividend to 170 cents per share. Despite the strong results, investors sold out of the tech retailer, likely due to the 13.5% increase in inventory and 9 basis points drop in inventory turnover. Payables were also up 16% year on year in the first half. Some commentary out of the company's CEO, Terry Smart, likely also spooked investors too, as he mentioned caution around uncertainty in the retail market and elevated competition levels. Global healthcare giant CSL also released results this week that seemingly disappointed investors, as the company's Securus business posted a 9% decline in revenue amid declining numbers of US citizens wanting to be vaccinated against infections like influenza. The 5% sell-off on the day the results were released may have been overdone though, as CSL's Behring business that accounts for 72% of revenues posted a 10% rise in revenue, and gross margin for for this division came in at 51.1%, or 20 basis points above consensus expectations. CSL did, however, note that FX headwinds will likely be faced in H2, which may have spooked investors yesterday. But that was noted after the company reaffirmed full-year guidance expectations, signalling double-digit earnings growth is expected for the global healthcare giant. And finally, Car Group, the owner of car sales, fell out of favour this week after posting first half results that fell short of expectations. For the first half, Car Group posted net profit growth of 9%, which fell short of expectations, while revenues across Australia rose 9%, as did revenue in North America, while Latin America revenue grew 30% and Asia region revenues rose 15%. Globally, the high interest rate environment has pressured consumer demand for discretionary spend, especially for new vehicles, which reflected in Car Group's results out this week. Over the half, Car Group also reported higher expenses, including significantly higher sales and marketing and cost of sales expenses compared to the prior corresponding period. Looking into H2, Car Group didn't provide material figures for outlook, but instead said, "We expect solid growth in revenue across all regions." Now, across the board, from a macro point of view this reporting season so far, Trump's tariffs have been mentioned by Ansell through input and supply chain cost increases, while a weaker AUD to USD had slight impact on ResMed's results. As we get further into reporting season, we will likely see a favourable outcome of a strong USD to AUD for results out of Pro Medicus and Life360. CSL also mentioned unfavourable FX headwinds to come in H2, while the big miners may include outlook for tariff implications, as Trump announced a 25% tariff on all steel and aluminium imports into the US this week. So far, so good though on the reporting season front, as investors have mostly welcomed the results released that have surprised to the upside. Later this week, we will report on results out of CBA, Suncorp Group, Treasury Wine Estates, Insurance Australia Group, South32, QBE Insurance and Mirvac Group, among others. Thanks for joining us for this first reporting season video midweek this year for February 2025. Catch us every Wednesday for an update midweek and every Friday throughout reporting season. Have a wonderful day and happy investing.